I think they're in the opposite of control. I think they are in a really tight spot here. Fundamentally, if you zoom out a little bit, the Fed can't raise rates to whip inflation here without basically bankrupting everything. There is so much debt in the system, both at the sovereign and the corporate level, that if you allow rates to rise, people become insolvent really quickly. And you could say crypto is a canary in the coal mine there. So if you look back at the 1970s, when was the last time we had inflation this bad, Paul Volcker raised rates to 20% or thereabouts. And that was a contributing factor in, containing inflation. Now, if you raised rates to 5%, the U.S. government would default, right? Because our debt to GDP ratio is 120 as opposed to 30 as it was back then. And our deficit is around 7% this year as opposed to 2-3% as it was back then. So the system cannot tolerate rising interest rates. So I don't actually believe that the Fed can sort of carry out their stated agenda. I know they're talking really tough and they're posturing, but I think what's actually in store for us is something more like yield curve control, which we're seeing in Japan right now, where you're capping yields at a very low rate and you're printing unlimited amounts of fiat in order to cap those yields. Because I don't think there's appetite for cutting entitlement spending or defense spending or anything like that. So austerity is out of the picture. And I don't think there's appetite for default, obviously. The U.S. government's never going to default. So the only thing that we can actually do here is actually an inflationary pivot here. Now, I don't know what the effect of that will be on asset prices, but things are already breaking in the financial system. If you look closely, we're seeing basically any macro chart that you look at, whether it's 2-year treasuries, whether it's the price of the yen, whether it's the mortgage-backed security market, all of these things are showing enormous stress, and the rapidity of these moves is breathtaking. So I think the Fed is actually going to be responding to that. Some commentators say they have a shadow third mandate, which is the orderly functioning of the bond market. As that bond market starts to break, and it is breaking, in my opinion, if you look at a lot of these indicators, they're going to have to revisit their sort of proposed agenda here.
A couple of weeks ago, I was talking to folks, and I said that while I would not bet on it, I do think that there's an outsized chance that we will actually get a rate cut before the end of the year. Is that your viewpoint as well, or how do you think about like where this goes through the end of December?
Yeah, I share the view of commentators like Zoltan Pozar or Luke Groman or Lynn Alden that basically it would be genuinely impossible, especially in an election year, for the Fed to keep hiking here because that crushes asset prices, that reduces tax receipts. Tax receipts are basically a function of asset prices now. It crushes the economy. And, it's basically sending us not into recession territory, but into depression territory right now if they continue on their sort of trajectory. So I don't believe that they're going to do that because that would be an insane thing to do. And I believe that they'll reverse course. I think they just started reducing their balance sheet as of a couple of days ago. I don't think the U.S. can even handle 4%. Rates here. It's just, the amount of debt and leverage that's built up is so considerable.
If you had to pick an over-under how high they get before they reverse course, is it like 2%, 3%, 2.5%?
I would say the reversal will come no later than Q4 this year.
Q4, yeah. ECB holding an emergency meeting, I think, last night or this morning. How do you read into like other central banks, right? Obviously, the ECB said, hey, we're going to keep rates negative. We don't care what the Fed's doing. We're going to kind of break from them. Then they reverse course and they said, oh, actually, maybe we'll go back to kind of 0% interest rates and we'll follow. Now they have emergency rate meetings. Like, it just seems chaotic. Like, what are these other central banks thinking in regards to the Fed?
Yeah, I will admit I'm sort of like quite parochial. So I'm mostly a Fed watcher and I don't really understand what's going on in Europe. It just seems insane. I would say like fundamentally Europe's problem is that they have an energy crisis and sort of like everything follows from that. The other problem is that they're trying to unite all these disparate economies under a single monetary policy, which doesn't seem to work, and it ends up just being highly, leading to inegalitarian outcomes. And they've got this one blunt weapon The central bank, aside from the U.S. I'm watching right now is Japan. They're imposing yield curve control, right? So they're capping yields, I think, at 25 basis points. And even though they've unlimited funds to keep the pressure, impose that ceiling on yields, incredibly, I think it traded above 25 basis points a couple days ago, which is crazy because you're trading against something with infinite ammo, the printing press, and the yen is depreciating enormously rapidly as a consequence of that. So that kind of I think that's a glimpse into our future. Is yield curve control, keeping rates low in order to keep the government solvent, and then the exit valve is the dollar.